Hello and assalamu alaikum everyone. I'm Kashif Kamran and a very warm welcome to the AAA March 2025 mock debrief. Welcome to the day 4 where today I will be investigating the final question from the section B of the paper, which is the question number 22, 23, 24 and 25 by the name of Autumn Company. We have already seen 130 marks question and 120 marks question in the prior sessions. Today is the final session. And again, you're all very familiar with the time management of a 20 marks question. The time management for a 20 marks question is 36 minutes. You need to fit in your answer. You need to read, plan, and write within 36 minutes. And 1/4 of the time is for reading, and 3/4 of the time is for writing. Okay, just let's see what this question is about on the practice platform. I hope you can see in front of your screen the mock exam, the pre-March 25 mock exam, and we are looking for the question number 22 on screen. Now, this question relates with Autumn Company, and this question is yet another popular question we have in section B. Audit risk and responses, internal controls, we know these are favorite areas of examiner, even implication for the audit report. We saw a 5 marks question in our session 2 on audit reporting. And this question in front of your screen on Autumn Company is a all 20 marks question on substantive procedures. You know, examining team is very fond of giving you a full 20 marks question on substantive procedure, even though we found a substantive procedure in the question number 16, 17, 18, 19, we were doing, that was around the director's bonus. So we already had the 4 marks, sorry, on director bonus. And we had 20 marks coming here for substantive procedure. So that's like 24 marks of the 70 marks in this mock exam in section B is allocated to substantive procedure. And that is exactly the real weightage of this topic, highly dominating topic in the exam paper. Okay, just let's open up the discussion and let's do a drill on substantive procedure. Again, I'll not be solving all of them, but I'll be giving you a way to do them in a better manner on the day of exam. The first one, you can see that this is a typical question on substantive procedure where examining team will give you shorter scenarios. They have given you a scenario on receivable. They have given you a scenario on reorganization, and they've given you a scenario on depreciation. And they're asking you first, describe the substantive procedure in relation to the valuation of receivables of red company. So you need to make 5 procedures on the valuation of receivables of red company. That's the first requirement. So let's see how would you go down with the substantive procedures on the valuation of receivables. Control C, Control V, that's what you're doing in. Okay, just let's read the paragraph because I normally tell my students that procedures in AA are not rote learned procedures. You need to see what is happening in the scenario for red company, and you need to make your 5 procedures around it. Let's read what's happening. It is the 1st of July. You are an audit supervisor with Autumn, responsible for the audit of several clients, all having year end of 31st May. So the year end of the clients is 31st May, and you're standing at the 1st of July. That is after the year end, and you're doing the audit. Red Company receivables. Red Company has a material receivable balance owing from its customer, Plain Company. During the audit, your team reviewed the aging of this balance and found that no payment has been received from Plain Company over 6 months. And Red Company would not allow this balance to be circularized. So Red Company would not give you a permission to send a letter to Plain Company and to ask from Plain Company how much balance is owned. So from the age analysis, you got to know that no payment has been made from Plain Company since last 6 months. It's quite a material balance, and the company is not giving you permission to circularize. Instead, management has assured your team that they will provide a written representation confirming that the balance is recoverable. The management is willing to give you a representation that the balance is recoverable. Now, we know as student of audit that representation is not a substitute of the evidence directly obtained by the auditor. And representation can be the last resort of evidence. So if you are making five procedures, the fifth procedure can be representation. But first, we have to do something. So first of all, uh, Red Company has a material receivable balance owing from Plain Company. And during the year, the team has reviewed the age analysis and has found that no payment has been received from Plain Company over the last 6 months. So if I need to make procedures, I will first do an analysis of receivable balance from Plain Company this year versus last year to evaluate the fluctuation which has taken place and to discuss reasons thereof and to discuss the reasons thereof with with Red Company management. So what I can do in the absence of not circularizing the confirmation letter, I can see what is the Plain Company balance this year on 31st of May 20x4. And what was the Plain Company balance on 31st May 20x4? And do a analysis. If there is an increase in the balance or there is a decrease in the balance, I'll ask management the reason thereof. Secondly, I can review the breakdown of the balance as at 31st May and review whether any pending invoices due for payment, any pending invoices due for receipt from Plain Company has been received till the completion of the audit. So I'm standing at the 1st of July. My audit is ongoing. So till I sign the audit report, it might take me another month. So I will keep checking that whether any pending invoice which was due to be received from Plain Company has been received or not, has been received till the completion of the audit or not, because the management is not giving me permission to circularize. So there is a balance, which is the material balance, and no payments has been made in the last 6 months. So I need to see whether any payments have come in during the time I'm doing the audit. I hope you're getting this point. So it is the 1st of July. So throughout the month of July, when I'm there and doing the audit, I can check the bank statements. I can check whether any payment has been received from the Plain Company or the situation is still the same. Next, I can discuss with management as to why they are not willing to provide to write off or recognize any allowance for bad debts, considering 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 no payment from Plain in last 6 months. So I'll ask management as to why they're not willing to write off or recognize any balance for bad debts, because the management believe that the balance is recoverable. But we need to understand that what is the reason you're not providing any allowances against this balance. Thirdly, you can review any correspondence, if any, received from Plain Company to received from the Plain Company to understand any financial difficulties the company is facing, due to which payments, due to which there had been no receipt there has been no receipt from plane company. Uh, it is quite possible that the red company has received any correspondence from plane company. You can check that. They're not giving you permission to circularize, but they're giving you permission to do everything else. So you can review any correspondence, if any, from the plane company. You can review whether any payments have been received from plane company in the time you're doing the audit. You can analyze the balance last year and this year just to understand, has there been any fluctuation in the balance, or is it still the same? Is it still the same for the last 1 year? And discuss with the management, why are they not willing to provide any allowances against the bad debts? So this is how you're going down, building up your answer. Then finally, you can accept the representation because that's the only way out. If the management is saying it is recoverable, then you need to believe the management. But if anything goes wrong, the management will be held liable because the representation will be a liability on the management. The representation will not be the liability on the auditor. So if you want to use the representation, then that would be the last resort, not as the first resort. So you have the balance owing from the plane company. You're not being allowed to circularize. You have seen the age analysis. Um, you are looking at the valuation of receivables, right? So we have discussed with the management as to why they're not willing to recognize any allowances. We have already done the analytical procedure to understand how much search has been there. Also, one thing we can review we can review any further invoices raised to plane company uh, post year end, because you are checking the year end balance. What if this customer is fictitious? What if this customer is bogus? So you want just to check that, has any further invoices been raised to plane company post year end, and whether any payments has been received on against those invoices. Or you can also analyze the receivable collection period of plane company. That in journal, what is the receivable collection period? You can review the terms of agreement. That what is the terms of agreement with plane company? That in how much time the plane company should pay you, in 60 days, 90 days, 120 days of the invoice. So you can also review the terms of agreement just to ensure that what was the terms in which plane company was due to pay, like 3 months, 4 months. But if they're not paying for last 6 months, that's where the risk of valuation comes in. That's where the risk of allowance comes in. So some sort of such procedures can be made around plane company in the absence of no circularization of receivable. Is everyone clear with these procedures? You can have more thoughts to it. You can have more ideas to it, and you're open to that when you're writing the answer yourself. But look at my procedures: analysis, review, discuss. They're all starting with actions, and they all have a reason. So just like the way I taught you writing the procedures on the director bonus, I'm writing the procedures the same way here. Is everyone clear? Anything you would like to ask? Anything you'd like to inquire? Okay, great. So I tried making most of the procedures from the information given. And then, because we could not circularize the confirmation, I thought about doing some alternative substantive procedures, like checking whether any invoices have been raised post year end, or checking whether any payment has been received from the customer up to the completion of the audit. So that's what I'm looking into. You move to the next question. We have substantive procedures in relation to the reorganization provision at Spring Company. Now you have to make procedures on the reorganization provision at Spring Company for 4 marks. So you take a Control C, Control V, and you need now to make procedures on reorganization provision for 4 marks. Let's see what's happening in the reorganization provision. Spring Company operates a chain of health and fitness club. The company recently announced its plan to reorganize its health and fitness club. So they have announced the plan. They have announced the plan to reorganize. This will involve closing some clubs for refurbishment, retraining some of the existing staff, and disposing of surplus asset. These plans were agreed at a board meeting. So the plans were agreed at the board meeting in May. The year end is 31st May, meeting in May, and announced to the shareholder on 29th May. So you have made a communication or a formal announcement of reorganization prior to the year end. So as per the definition, you should recognize a reorganization provision, and that's exactly what the management is doing. Spring Company is proposing to make a reorganization provision. That's very rightly because you announced the plan on 29th of May, that is 2 days before the year end. You made a formal announcement, so you should recognize a provision. Now, my first answer first would be that I would review the board minutes of Spring Company to confirm the approval of the reorganization and to and to further confirm it was before the year end. It was before the year end. I will review the formal announcement. I will review the formal announcement made to shareholders on 29th May to confirm the announcement was made to reorganize the health and fitness club. We know that the formal communication is a very important criteria to recognize a reorganization provision. So I just want to confirm that they have indeed made a formal communication. Lastly, I would ensure that the retraining cost, retraining some of the existing staff, retraining cost. We know that this is disallowed. You cannot recognize the retraining cost as part of the reorganization provision. So retraining cost, review the breakup of the reorganization provision, and confirm that retraining cost is not included in this provision, as this is prohibited by the relevant standards. You can cast the schedule of provision to ensure arithmetical accuracy. Something like that. And you finish off with your procedures. So you verified the board minutes to confirm that the approval was given before the year end. You also review the formal announcement just to confirm that it indeed was made. So you had a logical ground to recognize a provision. You will ensure that the retraining cost is not included in the reorganization provision because that's prohibited. And you will cast the schedule so that things are accurate in that case out. Right? So this is how you go down with the 4 procedures. Again, starting with action verbs, review, cast. Okay, then you go down to the next one. We had 6 marks for substantive procedures in relation to the depreciation of summer company. So you will read the scenario around depreciation of summer company. The paragraph is given over here. You will read this Summer company incurred significant capital expenditure during the year on updating the production facilities. The finance director has proposed that the new plant and machinery should be depreciated over a 10 line using straight line method. So you will discuss with the management the basis of 10 years, the basis of straight line method. Previously, the plant and machinery has always been depreciated over 8 years using a reducing balance method. So you will need to discuss with the management the reason or the underlying reason of the change of accounting estimate going from reducing balance method to the straight line method and from 8 years to 10 years. So a lot of discussion would come in. Then definitely you will recalculate the depreciation over a 10-year basis, and you will ensure that the depreciation charge is accurate. You will review the breakdown of significant capital expenditure, that there is no capital expenditure which should be expensed out, and all the capital expenditure you have incurred met the criteria to be capitalized. So you will go into that depreciation paragraph and you will make up your 6 procedures. I hope you will be able to do so. Okay, then you move next and you get the final 5 marks. Explain the audit procedures the auditor should perform in assessing whether or not farm company is a going concern. Now, this is a question on procedures the auditor should perform in assessing whether or not farm company is a going concern or not. You need to make 5 going concern procedures. Will you be able to make procedures on depreciation? Now, I'm making 5 procedures on going concern. Okay, so you learn to make procedures on going concern event. Going concern procedures. Number one, Autumn Company is also currently conducting the audit of a prominent client for the year ending 31st March. Farm Company is an established pharmaceutical company and has lately seen a real growth in the level of competition, and demand for its product has significantly declined. So one issue where they're facing a going concern problem is a real growth in the level of competition, a real growth in the level of competition, and the demand for its product has significantly declined. That's one reason. Farm company needed to invest $7 million in the plant and machinery and wanted to borrow this sum, but was unable to agree suitable terms with the bank. Therefore, it used its overdraft facility, which carried a higher interest rate. So they could not borrow. Uh, they wanted to borrow this sum but was unable to agree suitable terms with banks. So that means they are not in any good relationship with the bank. So the bank was hesitant to give them a loan considering their financial situation. Therefore, they relied on the overdraft facility, which was pretty costly because it has a higher interest rate and definitely would have impacted their profit margins because higher interest rates would have increased their finance cost, and eventually that higher interest rate would have also deteriorated their profit margins. Consequently, some of the farm company suppliers have been paid much later than usual, and some of them has withdrawn credit terms, meaning that the company now has to pay cash. So some of the farm company suppliers have been paid much later than usual. That's another problem. And some of them has withdrawn the credit terms, meaning that the company now has to pay in cash. As a result of the above, the company's overdraft balance has grown substantially. So your overdraft balance has grown substantially. That means your interest cost is rising drastically and is also dampening your uh, profits. Now you have the situation. You need to make procedures in assessing whether or not farm company is a going concern. Now, when you're assessing whether farm company is a going concern or not, what sort of procedures you make? Number one, review the forecast sales analysis, because for going concern, we have to look into the future, right? Going concern is not historical. Going concern means to assure that the company will continue to do operations in the next 12 months. So demand for its product has declined significantly. Review the forecast sales analysis to ensure uh, any anticipated any anticipated improvements in sales demand over the next 1 year. Over the next 1 year. Analyze the current year sales versus last year to confirm the actual dip in sales and to discuss reasons thereof with management. Review the cash flow forecast. Review the cash flow forecast for the next 12 months to confirm any improvements in company liquidity position in order to pay supplier on time. Discuss with management any future prospects, any future prospects or plans whereby they uh, any future plans or prospects to confirm any dramatic change in business operations, or will it remain the same as of now? So, do management have any plans for future whereby they need to bring some dramatic changes? Because currently the business is going down. An auditor wants to see the future sales forecast. The auditor wants to see the future cash flow statements. The auditor wants to see the management plans and intentions just to see that how things will be mitigated. Currently, the picture given to you is a very pessimistic picture. Will it become optimistic? If it does not become optimistic, we need to conclude that this company is not a going concern. But if there is any sort of optimism, we can say there is material uncertainty relating to going concern. Some of the suppliers, you can even review the correspondence with suppliers, review correspondence with suppliers to confirm how many of them are unwilling to supply on credit. How many of them are unwilling to supply on credit? And you can also review correspondence with banks to confirm whether banks are willing to offer any short any loan to the company. So you can review correspondences. Okay, so look at the procedures on your screen. You can review. You can yes, you that's what we have mentioned over here, right? Review the cash flow forecast. So we will review the company's forecast for the next 12 months in order to judge their liquidity position, in order to judge can they pay off their suppliers, can they pay off the interest payments. So we've already mentioned that in the point number 3. Remember that when you are making the going concern procedures in exam, the definition of going concern is important. The definition of the going concern means foreseeable future. So that's why I focused on reviewing the forecast sales just to ensure will there be any improvement into it. I reviewed the cash flow forecast just to ensure will there be any improvement in the liquidity position. Then I also reviewed the correspondences with the supplier because that was given in the scenario. I also reviewed correspondence with the bank because that was given in the scenario. I also analyzed how much sales have gone down because that was given in the scenario. And I also discussed with management, do they have any plans? Because at the end of the day, who will rescue this company? Who will rescue the farm company? Not the auditor, the management. So do management have any plans, any prospects of changing the situation which currently is being faced by farm company? So discussion of the prospects, discussion of the opportunities is a very important point when you're writing the going concern procedures. So reviewing the forecast, analyzing the sales, reviewing the cash flows, discussing with management, reviewing correspondence with suppliers and banks, you will come to a conclusion whether this company will survive or will not survive. So you need to make 5 procedures. I wrote 6, but still you can make any other procedure which pops in your mind and is still relevant. I highlighted different colors, yellow, green, blue, pink. You can look into them. You can even see the profit forecast because your interest rates are rising. Your interest cost is rising. So probably your profit would also start to dip up, or you can see how much profit has gone down because of the higher interest rates. So is everyone clear with making procedures? It is important that you read the case. And just like Bango was asking a question about the subject matter. Now, Bango, when I say review, the subject matter is what am I reviewing? I can review so many things. So, what are you reviewing? That's the subject matter. If you're discussing, with whom are you discussing? With the finance director? With the management? With the sales director? With the finance director? Discuss subject matter. Recalculate. What are you recalculating? The depreciation expense. That's the subject matter. What are you recalculating? The amortization expense. That's the subject matter. So every time you say recalculate what, that's the subject matter. Discuss with whom, that's the subject matter. Review what, that's the subject matter. And then you write the reason, that what's the reason to review, what's the reason to recalculate, what's the reason to discuss. I hope you're clear on that, Bango. So is everyone fine with the procedures? You can also rote learn the procedures on going concern. They are in my lectures. If you are part of my regular F8 classes, you know that I have covered the procedures on going concern. So you can rote learn them as well. And you can then modify those procedures according to the situation given to you on the day of exam. So is everyone clear with making procedures? You have to make them on depreciation yourself. I tried making it on reorganization and receivables, and then I made it on going concern. So that's completing the mock debrief. We went over the section A and we went over the section B from the question number 16 up to 25. 1 to 15 was in section A, 16 to 25 was in section B, and we have completed this debrief over the last 4 days and last 4 sessions. So I hope you will learn something from this debrief and you will invest in that and you will be doing better practice for your March 25 exams, and you will ensure that whatever you are writing in the AA paper is well linked to the case study, and whatever, read the requirement very well, right? Is the requirement telling you to explain something or list something? Because that will change the way you write the answer. Don't lose the knowledge marks. That's very important. So I hope you will largely benefit from it. I wish you all the very best of luck, and I'm signing off from the final session of this March 25 mock debrief for AA, which was published by ACCA. Thank you so much. And if you have any further queries or questions, you can then ask me in the WhatsApp group. Thank you. Take care. Goodbye, and Allah Hafiz.